you're getting at. So what ultimately what I do is I'm looking at buying into demand zones. Yeah, these demand zones, right? So I know at this point, and this point, right? So unfortunately, when you've come in, right, you've looked at here and it hasn't worked out. Yeah, and especially over December as well. December hasn't been great. I think there was a lot of profit taking going on into Christmas, end of the year, etc. Right, especially on something like the pound, the dollar Swiss as well. That kind of kept going down. But my thing is this is all I do. Once I've got a fundamental bias, one versus, let's say for example 8. Yeah. Now, just because it's 8 doesn't mean that this is always going to keep going higher, because remember, the markets are manipulated. Yeah. And secondly, understand that the lower prices go, but the more prices stay, like, I mean, the fundamentals stay like this, is the better the value. Because remember, if we're looking at price, this is maybe 10, this may be 5, etc. This may be 1, right? Now we're buying at maybe 8. All right, that wasn't seen as an absolute bargain. Then we buy at maybe 6. That might be seen as a bargain. You understand? And if it is, then I don't mind losing here, yeah, or even better, exactly, losing here. Because if prices come down to here, right, and we're still 1 versus 8, yeah, then this is telling me that the upside potential is massive.
Yeah, probabilities are much higher
There you go.
Especially if you break it down to number 1, you've got an exceptional bargain there.
There you go. So there you go. So I don't mind losing 2 or 3 trades to play out in my fundamental idea. The same thing happened with the dollar Swiss, right? Dollar Swiss for me, yeah. This is a perfect example of this, right? I got in, I think, dollar Swiss. I think I took a trade somewhere around here, and got one position and then stopped out of another. Then I got in around here. I think the same thing happened where I made one position and got stopped out another. Over Christmas, didn't bother. And then I got in again around here, I think, and I made one position and got stopped out of another. So, as much as I've wanted prices to go to the upside, they just haven't over the past, since basically the whole month of December. But it hasn't put me off. I haven't thought to myself, oh, maybe I should have got short, if you know what I mean.
Yeah, you saw it with the dollar pound as well.
Yeah.
It's only recent that it started moving back in the way that you normally expect it to after the election. That's kind of like the
exactly. You're exactly right. This move was driven by the election. Yeah, election. That's all that was, right? And now the problems have still resurfaced. Yeah, this was more sentiment driven, but now the problems have resurfaced, and now this is what the accumulation phase. This phase is where the banks now are looking to accumulate dollars versus the pound potentially, and then you get the move potentially going to the downside. Because again, when you're here, you have to ask yourself, what is the upside? What good news do we have for the pound? So that none of us suffer from confirmation bias. Yeah, try and find some good news for the pound. And if you can't find any, then why are you buying the pound? Why are you buying at demand? Hello?
Yeah.
Oh, yeah. There should be no reason to be buying the pound. And then you do the same thing with the US dollar. And you might find some good news, you might find some bad news, right? But again, to the degree of good news and bad news in comparison to the dollar's good news and bad news, this is going to be the one to buy, and this is going to be the one to sell.
Just keep buying, cheaper.
Absolutely. That's all the price chart is. Price charts are just price. You're looking at a bargain price. That's all we're looking for is bargain prices. And supply and demand zones are areas where we have potential demand. I mean, a bargain. It was a bargain here because that was a previous expensive area. Prices couldn't go above that area there. When prices came down, buyers bought so much and even bought at this area that was seen as, there was demand here. Now, if this is an expensive area because there's no more demand pushing prices higher, the source of this move between this high and this low, the strongest area where that demand originated from has to be the absolute bargain. And if prices come down and we still have the fundamentals are the same, then we have a good chance that this may also be seen as a bargain. Prices may come down, sentiment may change against, number one, and then we get this. Fine, that's fine. That's the reason why we manage our risk. And we only risk 0.5%, 0.2, 0.1%. Some people risk, 1%, etc. But none of us know which one is going to work out. But what I do know is that the fundamentals will always play themselves out eventually. They always do. Yeah.
That's brilliant. What you said is absolutely brilliant.
Yeah. So that's why you'll probably, if you were buying a slightly cheap but regarded an expensive area for us, you definitely lower your position size. And then if you did end up getting to a bargain area, you'd be more inclined to up your position size then and make your money on the way back up.
There you go. That's exactly it. Because these moves are going to be my 6, 7, 10, 12, 13, 14, 15 to ones. You see what I'm saying? So I don't care if I lose 3, 4 trades in a row. That doesn't concern me. 5 trades in a row. If I have conviction of my fundamentals, and it's tough, by the way. It's very, very tough to have this. It took me at least over a year to really kind of be convinced about the fundamentals, simply because of the stage that you're at now, and you're seeing price go against the fundamentals, and you're like, well, does fundamentals really work? You know what I'm saying? Does it really? But you have to have conviction and have a bit of patience and understanding, with the fundamentals, because eventually it is going to play itself out.
Yeah, nice one.